Hello everybody. I'm here to give you a market update, but before I do, I want to mention something. First of all, these forecasts, these advice that I give is not guaranteed. It's just my opinions based on my observations and experiences. So keep in mind, I'm not licensed. I don't guarantee anything in return from the people that are watching this clip. So anyway, let me at least give you my insight. As you can see here, the NASDAQ is at 4,100, or it was at that time, but right now we've managed to go above 4,200. So what's happening right here? Well, it looks like we're back down to the April and May territory. We managed to drag lower than where we were around early August. And despite that smackdown that we had, we managed to rally up much, much more successfully. And we did manage to close higher than the peaks of early July. Nevertheless, however, we did manage to continue to smack down even more, lower than where we were in early August, and we're still, like I've mentioned before, where we are in late May and even late April. So with that being mentioned, so we're kind of having like a higher lows and higher highs. So we had higher highs, higher highs, higher highs. Well, we didn't have higher lows, but of course, if you're looking at it, major corrections, that's when you're talking about. So the thing I want to point out is that what is going on? Are we seeing a major collapse like 2008? The answer is not really. Yes, it is fall, and yes, the markets are very heated up at this time. But of course, typically in months that are around fall, they tend to have major sell-offs. Okay? If you've studied the markets, you should know that a lot of crashes happen, or even just corrections happen during the fall months. So we've had the October 29 crash, we've had the October 1987 crash, and we've had, of course, a number of ones like even the October 2012 or October, I believe, 2011. We had some correction back then. So this is just simply history just rhyming itself all over again. And of course, this steep is very similar to this steep right here, and it's pretty much about the same when you factor in percentage gains. So I got into this index right around here, okay? So I still haven't really experienced huge losses. Of course, my profits have been trimmed, but nevertheless, I'm really not in that bleeding territory, okay? So as far as I can tell you, okay, earnings are not looking too bad, okay? You also have to keep in mind that. You also have to understand that still the stock market in the U.S. seems to be more of a safe haven than a lot of other stock markets, particularly like the Shanghai Composite and a lot of European stock markets. You can also keep in mind that price-earnings ratio isn't too bad. I believe the NASDAQ is around 22. The Dow Jones is around 16, 17. Look at the MACD. Look how oversold we really are. Look how much it has pulled down. We're even lower than where we were in around April. And it seems like we're sort of slowing down, so we can start seeing this thing move back up. Look at the RSI. We're really getting into oversold, under 30. These are very good indicators that it's potentially a good time to buy. We made this floor right around here, 4,100. Look at this. We've struggled to come down even further, but it seems like we've managed to close back up higher in trading days. This is kind of a similar pattern that we've had around late April, early May. So you'll also look at here. This is the 2-year chart. When you're looking at oversold territory, it's very similar to where we were in around November. As you can see here, the MACD, quite similar to where we were here, and we're right now reaching at that territory. Look at the RSI. We were around 38, and we're right now at around 40 or some can say in the upper 30s. So this is simply history rhyming itself. Now, I'm very certain that it will go higher. I can guarantee you that. If we continue to break below, there is a floor at 4,000, right around here. And there's also potentially a floor at around 3,700. Now, can we get to that? I really doubt it. Okay? We just don't have a lot, terrible economic figures to prove that. And, of course, some people say because it's Ebola or lower oil prices. By the way, lower oil prices can be a positive indicator because that means there's more money to be spent in the economy, which is good for corporate earnings. But on the other hand, it's negative for corporate earnings when you're looking at the energy sector. So anyway, you have these fundamentals into play. Now let's look at the after hours trading. And as you can see here, we are looking pretty positive. Of course, these things don't really indicate anything. One thing that's grinding my gears is this right here. Netflix, as you can see here, it's about 26% down in after-hours trading. So this is a really, really critical situation. And by the way, you're only seeing one company, so a lot of other companies that are belonging to these indices may be going higher after hours. So this is positive despite the fact that in Asian markets are being negative. But look at this. Oil is continuing to bleed right here at around $80 a barrel. It wouldn't surprise me if we break below $80 and head to maybe in the 70s. If we plunge to around 75, I believe we would have the lowest oil prices in about 4 years or so. As a matter of fact, I believe the Brent crude is at its lowest level in about 4 years. And speaking of oil, gasoline prices have been falling. As you can see here, this is where I live, Orange County. It's been falling. I don't know why today it went up with the U.S., but Orange County, it's been continuing to fall. And you can see here, now we pay higher generally than the national average. Of course, you probably know why, the cost of living, higher taxes, and so forth. So let's take a look at the 4-year chart. And if we just can fall below a few more cents, we would be in lowest level around early 2011. But wait till Christmas rolls along and we may touch around maybe 330. So we would be around that territory. So this is going to be very, very interesting to see. And if we continue to fall further, it's going to be very difficult for us to see $4 a gallon gas again. But personally, it really doesn't bother me too much or benefit me too much if it goes higher or lower. So let's take a look at what a lot of these analysts have to say, and let me try to kind of make you feel as if, I don't know, what they're saying is kind of misleading. While this market volatility is here to stay, I mean, come on, to me, it's just a bunch of fear-mongering, time to buy, run. It's just confusion. Look at all this stuff. I mean, all this trash you can find in the media. Let's go back to the NASDAQ. And they say, buy in the dip. Okay. Well, again, he can be right. What he's saying is similar to what I'm saying. But, of course, he's probably not going to guide you the right way the next year or so. So you can see, and then of course you can look through YouTube, and you can also see people that are charging for today's panic selling on Wall Street, can get much worse. I mean, look at this. He said stocks are going to move higher. I mean, 5 days ago, it tanked. I mean, I didn't even make a video that it's going to go higher. I mean, come on. And we'll move higher when? It's... global collapse is happening now. Yeah. Come on, this is just a repeat of a tune of last year and a couple of years ago. But of course, what you also have to understand is, even though he may be right on some aspects, is he right about the whole dollar collapse high inflation scenario. Well, looking at oil prices, no. Natural gas prices, no. Unleaded gas, no. Look at gold. It hasn't skyrocketed. It's silver, near all-time lows, at least in the last several years. Look at corn. It's not going up. Look at food prices. I mean, look at this. Hog prices have fallen. So it looks like bacon prices are going to go lower. This has retraced from its all-time high. I mean, seriously. I didn't even think cattle prices were supposed to go up so much. Now, thank goodness I'm not paying more for ground beef. If you buy the 100% grass-fed beef, you really haven't been pinched. This, I believe, refers to the beef that's concentrated by only select few mega corporations that have their concentrations in the south central part of the country. And look at this. Sugar, not near all-time highs. Cotton near all-time lows. This is expected to drop, I believe. The drought is going to end pretty soon. And after the Ebola situation, we're not near all-time highs. It actually fell, believe it or not. So all this fear-mongering about hyperinflation and all that, well, it's not really coming true. Let's look at the US dollar index. And as you can see here, the dollar hasn't crashed. So we have slipped a little bit. I believe that the safe haven moved into bonds. But of course, who knows if that's going to linger on for months and years to come. In fact, I believe a good chance that it will reverse in the coming days and weeks. So this is what you really, really have to keep in mind. Okay? By the way, you also have to keep in mind that in this volatility like this, by the way, I don't even buy into market watch. It's lots and lots of scare tactics as well. But you see, they cut their losses. You really have to go to a time where the volatility is very, very low. So let's take a look at the volatility. As you can see here, okay, well, there's no volume. I don't know why, son of a gun. Let's look at the volatility, and you can see here, let's see if the volume cools down. Let's see if they have a chart of the volume. Okay. Alright. Alright, well, it actually says right here. So we were at around, we cooled down to less than around 2. Let's see where we are now. And we're at around 3. So we had a lot of volatility. So what we need to see is we need to see the volume to really start cooling down. And then we can start, it can be potentially a better place. Oh, you have volume right here. So once you see this volume cools down, it can be probably a safer place to be. Okay, that's just the way I see it. I can be wrong, but to reduce your risk, you might want to do that. So look, we peaked at around 4,600, and our high was, what was our high, believe it or not? 4,610. Yeah, it was around the 19th. Wow. So ever since, it seems like when I turned 22 years old, which this is actually my birthday, it began to crash. I mean, I guess I really don't like to be born at the September 22nd. Anyway, take care.